Hey guys, what's up? Alec back with the daily stock market, and today we're going to be talking about a few different things. We're going to be talking about the stock market crash because a lot of people are asking me about a lot of different stocks. So we'll go over some stocks individually, what I think about them, what stocks I'm personally buying during the dip. And if you guys look at my buying power, you'll see $28,000, and right below that, you'll see Robinhood Gold. Welcome. So what I am doing is taking out margin at this point in time to buy heavy during the dip. So we'll go over margin investing. Some people have been asking me about that. I think it's for everyone and what I'm personally doing today too. So to start off this video, you'll actually see that I'm down $840 today, which is a pretty big downward movement for a day. I'm sure a lot of you guys are red right now in the market. Pretty much every single stock is red. Probably about 90% of stocks are red. So if you guys are red in the market, don't really worry about it. It's not anything too concerning right now because stocks go up, they go down, and it really depends and shows what kind of investor you are. If you're buying during the dip or if you're selling during the dip. Because believe it or not, a lot of people are selling right now. And when everyone's selling, you definitely should be buying. So let's go over some stocks individually that are down significantly and I think are some good add to money plays. Beyond Meat is down 38% from its all-time high in just a few months. And we're going to rapid fire some of these. So I think that this is an add money to play, and I'm currently adding money to it also. TTCF, another plant-based food company, down 27%, guys. So I'm adding money to this one as well. Amazon's even down 11% from its all-time high, so I'm definitely adding money to Amazon for long term. Shopify down 22% from its all-time high. Workhorse down 65% from its all-time high. BNGO down 54% from its all-time high of $15. And many more are down too. SNDL's down big, Riot's down big, TLRY's down big, all of these PLTR's down big. Skills is down big, Clove is down big, iClean is down big, and this is an ETF that I have been stocking up on. I've been buying the dip on this one, down 27% from its all-time high as an ETF. CCIV obviously down very, very big, and Lemonade down huge also. So I'm buying the dip on all of these, down 47%. And now is really not the time to be selling. A lot of people are selling. That's why we're seeing red in the market. Typically, we see red when people sell. It really depends on what kind of investor for you. In my opinion, I'm definitely buying right now. I am not selling at all. Even if it goes down a bunch more, I'm still going to be holding these stocks and buying into the dip. If the S&P falls 10%, in my opinion, the NASDAQ could fall 15%. And that means these high growth stocks could fall another 20 to 40% if the NASDAQ ends up falling 15% or more. Because right now the S&P and the NASDAQ haven't fallen too much. I think they're only down like 5% in the month. And you should always look at risk versus reward on stocks and not just reward, because a lot of people are buying in these stocks and just looking at the upside potential. But you need to start looking at the risk that's involved with these stocks too. Energy stocks are a great deal right now. Energy is getting absolutely demolished. All the renewable energies, and it's a great time to stock up on these ones because in the future they are going to be a big deal, especially with Joe Biden as presidency. He's going to be huge on renewable energies and EV vehicles. Also, big tech is getting demolished and is a great deal right now also. Cryptocurrencies taking a little bit of a spill, and Mara and Riot are both great to get into for right now also. And one thing I want you guys to write down is if you guys don't like holding during downtrends, which is happening right now, make sure you're locking in profits during the uptrending market. So when things are really green and we're having a very frothy market, that's when you start want to lock in profits. If you don't want to hold during downtrends, make sure you're locking in your 20-30% gains. Now, CCIV specifically, they were supposed to deliver vehicles in the spring and have 6,000 vehicles delivered by spring. Now they're probably going to delay production until second half of 2021 and only have 500 vehicles delivered in 2021, which is why CCIV is keep on dipping. Now, the household debt, guys, so debt is at an all-time high. And on top of that, interest rates are starting to tick back up, is something Kathy Wood was talking about. As interest rates go back up on mortgages, interest rates, the stock market you'll actually see going down a little bit too. And let's not forget about inflation and that we're printing a lot of money right now. And Kathy Wood specifically says that she likes Bitcoin and cryptocurrency as a hedge against inflation. In my opinion, the Senate needs to pass this 1.9 trillion stimulus ASAP. They need to pass the $400 boost to unemployment and the $11 billion to airports to avoid layoffs. So $11 billion is going to be going to airports just to avoid layoffs. And the $1,400 is still coming, so we need that ASAP, and it should be coming by the end of March or early April. But they did do a new contingency, and it said only if you earn over $80,000, you won't be getting the stimulus, the $1,400. But if you earn below 75, you'll get the full thing, just like normal. It used to be between 75 and 100K. If you earn that much money in the year, you get the stimulus. But they did lower it to 75K to 80K is the cap out. So after 80K, you won't be getting the $1,400 stimulus check anymore. So that leaves us to talk about margin investing and margin money. So what you'll see right now, I have $30,000 in my Robinhood portfolio. And when you invest with margin, they'll match you dollar for dollar. So if I have $30,000 in my own money, they'll actually give me $30,000 to $28,000 of money to invest in margin. And all you have to pay is 2.5% per year on the interest that you're borrowing. So I would not recommend margin investing to any beginner investors or people that are not experienced in the market, especially if you have paper hands and you aren't really that experienced and you're very emotional is the thing too. So if you're an emotional investor, because remember, this is not your money. So that's the biggest thing. It's not your money. So if you do risky investments with this money that's not yours and you end up losing it, for example, if you end up losing this 30K, that means you owe $30,000 still. So it's not free money. You're borrowing it. You need to pay it back, and you have to pay 2.5% interest on this borrowed money. Now, for me, I'm an experienced investor. So I'm going to be margin investing right now, especially during the dip. I want to have a lot of capital around to buy into the dip. And that's on Robinhood. If you have a different platform, the margin investing might be a little bit different. I know some of them, like Interactive Brokers, go as low as like 2% on margin investing. Now, if you are going to be margin investing, I recommend not doing 100%, like dollar for dollar. I would recommend only going about 20% on margin. So for example, if you have $10,000, 20% would be about $2,000 on margin. So you get $2,000 on margin. That way you know you can easily pay back 20%. So if I have $30,000, 20% would be $6,000 that I should be using on margin. Now, if you're a little bit more experienced investor, you can go 30% or 50%. Now, you might want to look into margin investing a little bit more than just what you learned from this video if you never heard about it before, because there's a lot that goes into it. It also, you could be risk for a margin call. So for example, if your profile starts going down and you used up all your margin, what happens is they can start selling your stocks automatically. So even if the stock is down 50% and you want to hold that stock, they'll automatically sell it for you so you can pay off the margin that you owe. So be very careful with margin investing, especially during the dip. And whatever you do, do not max your margin out. So you'll see here it says buying power 28,000. You do not want to spend your whole buying power on margin. That's a big thing. You probably only want to spend 20 to 30% of your margin. You can even set like a limit, like set borrowing limit, and instead of 27, you can put it to like 10,000. So that way you're not tempted to spend that whole 28,000 that they give you. You only have $10,000, right? So margin investing, it can be very beneficial if you know what you're doing, if you're an experienced investor that needs extra capital right now. And feel free to pause the video and read through some of this. What is margin investing? You can read that. What are the risks of margin investing? So you can even read that also. And what if I'm not suitable for margin? How do I pay for margin? So you can pause these and kind of read through them all. How do I know when I'm using margin? How do I stop using margin? Can I set a borrowing limit? Can I increase my available margin? Why can't I use all my available margin when I buy a stock? What is margin maintenance? What is a margin call? So this is one that you definitely want to read and make sure that you do understand what a margin call is, because that's very real and that's the biggest risk of investing with margin, is getting a margin call. What do I do after I get a margin call? So you can actually read those two. So feel free to pause that and read through some of those paragraphs of margin. Familiarize yourself a little bit about it. If you want a full video on margin investing, I'll be happy to make that video for you guys too. And as you guys can tell, I'm going to be buying heavy during the dip. That's why I actually went ahead and got my margin available, because I only had like $3,000 more in my account and I plan on buying a house soon. So I want to have capital available for a house and la-di-da-di-da-da. And I hope I made myself clear that I am not selling my stocks. I like all my positions that I'm in. I feel very confident about them over the long term. So I want to be buying heavy during the dip. If you think this video was helpful, go ahead and send it to one of your friends. Share it with a friend. Smash a thumbs up so we can actually reach more people and the algorithm can recommend me to other people as well. Comment below if you want that full margin video. So I just wanted to put out a quick video for you guys to show you guys my portfolio, what it's looking like today, and my expectations going forward. Also, a quick tip if you stay to the end of this video. If Friday morning comes around and we start seeing the market downtrending again in the pre-market, I'm going to be probably taking out a put on Apple stock or another big tech stock and ride the market down. So if it goes down, it goes down. I'm going to be doing a put option on Apple, or maybe I'll even do a put on ticker symbol SPY if the pre-market opens red and they're showing downtrend in the pre-market, and right as market opens, if it starts going red, I'll take one out right at market opens, a put on SPY or maybe Apple stock, so I can write it down and do like a quick little day trade to make some money back from the market going down. In my opinion, I don't think it'll downtrend too hard tomorrow though. I think that we'll actually see green tomorrow in my opinion, or we'll probably just see a flat day. So if we start seeing a big downtrend, take advantage of it. I'm going to be taking out a put on probably Apple or ticker symbol SPY. All right, guys, I wanted to give you that one last tip if you stayed to the end of the entire video. And remember, I'll see you in the next one. Don't time the market, buy the market. Peace.